Hi guys, doing a little bit trading in the sun. It's currently early morning here in Jamaica, 7 o'clock, and while Winky's gone off to the gym, something wrong with her, I'm doing a little bit of work. Chart's all set up, nicely rigged, and helps pay for the holiday we're currently on. But today I want to answer a very important question. How far are you into your trading journey?
Matron, take them away.
It's a little bit better. Get yourself a little bit comfortable, shall we? Okay, here we are. Got a lovely room in this hotel. Got my nice little sitting room where you saw me starting this morning. And I've also got massive 4-poster bed.
Matron, take them away.
How good is that? Winky's over the moon. So am I. Well, let's get into this sort of question of Dusty, shall we? Where are you in your journey? Well, it's quite a difficult question to answer because there's only you know you. And I often have a quote that you hear me say, know thyself. And the full quote is, know thyself, it is the beginning of wisdom. So it's a little salute to Dusty again. And let me try and see if we can not so much tell you where you are in your journey, because obviously I don't know people individually, but maybe highlight a few things that can help you. Now, if you've been trading under 3 years, you're probably still in the beginner stages. Now, you may well see somebody come out of the gate and do incredibly well. However, what's seen on paper and one thing and another, and what's actually happening can be two different things, because they haven't probably been around the market for the certain market cycles. Now, the markets have cycles where they'll surge forward, they will correct, all this sort of thing. And if you're caught on a natural bull run, that's like shooting fish in a barrel. But there's an old saying, the trend is your friend. But it also has an extra part to it. The trend is your friend till the bend at the end. And it's the bend at the end that catches most people out. Now, if you're trailing with the prevailing trend during the day, amazing. But you can have two traders on the same day. One long, one short, both be right. One's going with the trend, the other one's looking for the bend at the end. And the difference between those two guys and a beginner is they know what they're looking for. First one's just looking to go with the bigger trend, so they're looking to buy low. The one that is looking for the bend at the end is looking to sell high, but they recognize the conditions, and that's the key point. See, X doesn't mark the spot, it never has, but it's an easy sell. You know, just follow this mechanical system, you're going to make money. La la land. No, the markets don't work like that. Markets will do what they want, and you need to be able to react and see conditions. The higher you go up the time frames, the more of these conditions you can see, but then you need to drill into the low conditions to fine tune an entry you've already made or a decision you've already made. Now, what happens with beginner traders is they focus on too many products, too low in the chart. In other words, they're looking at 5 and 1 minute charts. Looks great, very exciting. And you'll see sort of the candles flashing and one thing and another. And suddenly you see your P&L come in. But as quickly as you see it, it can disappear. And the next part to that is they get caught in the euphoria of the low time frame. They position way too big for their account. You know, they'll be putting 10, 20 pound a position on it because they've got leverage to do it. But the account itself can't take it. So therefore, you might hit some big winners, but you're also going to hit some big losers. And those big losers are what are going to destroy your account. Now, the beginner trader will go through the roller coaster of, whoa, I've got loads of money, oh, I've got no money. Whoa, I've got loads of money, oh, I've got no money. And you'll constantly be treading water, dangerous grounds. So in the initial stages, unless you've got a win rate that is way in excess of 60%, but you're controlling the loss against the profit, you're a beginner. You know, you really are. If you have a win rate over 60%, and I'm going to explain win rates as well, because again, that is another fable, and it winds me up. Every teacher out there will tell you that it's 2% of the account. If you win 4 and you're on 3-to-1 ratio, you're going to make money. All of this stuff. No. Every trade is individual because the markets move in different ways every day. And ultimately, if you're doing this as a job and you can only get it right less than 50% of the time, well, you're not really very good at this job. You know, you're genuinely not, because you're not reading and recognizing conditions. And this is all day trading, by the way, guys. A day trader should be well in excess of 60% win rate. But not only are they getting it right more than they're getting it wrong, they're understanding how to control the investment as well. See, I don't refer to things as risk. I think if you're risking something, you're infirm, you're gambling. You should never risk anything. You should invest. So if you're investing £100, you want a return on that £100. Now, at the end of the day, if you started with 0 in the morning and you ended with 1 in the afternoon, you've had a good day. You know, you've invested wisely, but you also need to know when to stop. Once you've made your money, walk away. Now, a beginner can't. They'll think they've made money, therefore they'll go back to market and they'll look for the next trade. And that next trade could be the bend at the end, the one that takes it off you, unless you were looking for it. So, in essence, to your question, where are you in this journey? It's hard. Under 3 years, you're most certainly a beginner to intermediate. And what you are doing, you're possibly on the crest of a good wave. And the only way you're going to learn how to be super consistent, believe it or not, is through your loss. So one day you're going to hit the wall, and that wall can be a massive loss. For me, it was 7 years ago, and I took a hit of 18 grand that blew my account up, literally blew it to bits. Okay, but it taught me the best lesson in the world. It taught me that the market is better than me. Doesn't matter what I'm doing, the market is better than me. So I need to be able to get in and get out quick. So I learned that lesson. And it happened because you may have heard this story, because I've been interviewed many times. And it's the one lesson that taught me the most. I was trading the DAX, it was 2015, it was French election weekend. And I was shorting the market, because obviously I knew what I was doing. I put a position on way too big for the account, because I had leverage. So the ESMA rules that have reduced leverage, for me, having been through it, is a good thing. And anyway, took Winky away for the weekend. We're having a long weekend over to Portugal. And I left the trade running on the weekend. Well, it gapped up on the Sunday. Didn't look to fill the gap on the Monday, it just kept on going. And on Tuesday, when I came back to the office, the account had been liquidated to the tune of over 18 grand, or just on 18 grand. So 18 months of hard work, gone. just like that. Now, what it taught me was position size is key, but it also taught me you should know where your pain threshold is. Now, if I let a trade run 1,000, 1,500 against me, against my main account, it's not a lot of money, not really, you know. So I'm conservative with that. Once it starts going above 2,000, then I've got a problem. I've got a big problem, and that is the outer extreme of my account. So I know that, but a beginner doesn't. They would put 50% of their account against a trade. Now, if you've got a small account, and I'm talking sort of 100 quid, 200 quid, well, high investment against the account, it's just part of the cost because of the way trading is. You have to put up maybe 20, 30 quid against £200 just because of the market maker that you're with. Sort of IG, one that I use, it has 50p minimum position. So in order to let the trade breathe, it automatically has to be 10, 20 quid, you know. Now, if I've only got £100 in the account, well, that's a lot to bear against it. Now, fortunately, that was combated through ESMA rules, where they reduce the leverage in one thing and another. And sometimes you've just got to make your account bigger. And how do you do that? Well, you have to self-fund. Now, the other way around it is you can, instead of putting £200 into your own account, put £200 and buy a prop firm account, like the 5%ers that you see me trade. That gives you the leverage. However, it also raises another question. Just because you can sort of say, oh, I've got the boot camp or whatever it is that starts at 100,000, you know, it's a big amount of money for a very small entry cost. Your account is not the size of the account. So I think boot camp starts at 100,000. Now, it sounds brilliant, and you can open up a £10, £20, £30 position on that. But against the drawdown limit, it's ludicrous. So if you win, looks amazing. But if you lose, not so much. Because your drawdown on it is very, very small. You know, it's only a very small percentage of that account. So that drawdown limit that you're given, that's your account. That's where you need to position. And again, a beginner wouldn't necessarily know that. They would just see the big money and go for it. That's not trading, that's gambling. So, where are you in this journey? Well, if you can invest properly, in other words, control how much money you're putting on the table, that's a good thing. If you're reasonably consistent, in other words, you're winning 60% or more of the time, but your losses are not wiping out your gains, then you're intermediate. You're sort of getting there. Oh, excuse me. After that, you need to be able to recognize multiple setups. Now, if you can recognize just one, but you don't system hop, go from one to the next, then again, you're intermediate. But if you can recognize 2, 3, 4, 5, 6 setups, and you can switch any chart on, then you're starting to get to be good. You know, because a chart is a chart, but they do have nuances. You know, some have a tendency to trend more, some are faster than others. So you've got to be able to recognize that as well. And I sometimes think you're better off being a specialist than a generalist. Personally, I can trade anything. Chart's a chart. I've shown you that, prove it all the time. But my bread and butter is always cable in the DAX. I will go to those markets every day because I know them inside out. So it kind of makes me a specialist on them, if you like. But if I want to trade Aussie dollar, I'll trade Aussie dollar. If I want to trade gold, I'll trade gold. You know, but I need to be able to recognize certain criteria within it. And that's the difference. Whereas a beginner will just switch the chart on, automatically look at a 5-minute chart and go, right, oh, that's overstretched, I'm going to I'm going to sell that. Oh no, this is wrong. Why is it wrong? Because they didn't look at the daily, didn't see what the big trend is. They didn't look at the day trend from the 4 hour and the hour. They didn't see any correlation between the two. They looked too low in the market. So knowing where to look in the market is something as well. This is probably one of the hardest questions to answer, Dustin. But let's wind this up a little bit and I'll kind of explain signs to look at. Firstly, look at your win rate. Is it over 60%? Yes. Right, good. Now look at your journal. Why was that over 60%? Was it from a single setup, or were you just hitting lucky, jumping from system to system? Ideally, it wants to be from a single setup, so you're recognizing it, boom, 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 consistently. Are my losses in check? In other words, you're not letting them get out of control. If they're out of control, you are far from good, and you need to dial your position size back, which segues into position size. Are you positioning appropriate to the size of your account? Too many people put too big a position on and they don't understand why that's important. They just think it's, oh, the more I put on, the more I get. No, the more you put on, the more you can lose. Always think defensive. The best weapon in trading is be defensive, not offensive. You know, aggressive traders don't last long in the market. Showboat traders don't last long in the market. There's a very old saying, there are bold traders and there are old traders, but there are no old, bold traders. I have a big account, but I never stress it. Never stress it. If I lose, so what? Doesn't matter. It's part of the game. You know, if I win, then I've done my job right. Again, it's part of the game. I have absolutely zero emotional contact. But if you are emotional and you're going through the roller coaster of high and low, your position size is too big. You need to be able to recognize that. Then you need to understand what you're trying to do in the first place. If you are chasing money and you're constantly chasing money and you're dazzled by the flashy lights, then trading's probably not for you. It's a professional job, has to be treated with respect. And one thing's for certain, every time you see big figures, glossy video, the chances are you can't follow it. Because film makers don't make traders and traders don't make film makers. Very rarely the two of them cross. So when you see everything that's got high production value and one thing and another, they are putting on a show. When you see somebody that's sort of just rough, ready, oh, here's my chart, this is what I'm doing, and then you can track it in the moment, they're probably pretty good at that job, because film making isn't part of it. It's just another thing. Hype in this industry is massive. I do YouTube basically because I enjoy it. I enjoy it as a hobby. Am I very good at it? Not even close. You know, not even close. And I know that. But am I a good trader? I'd like to think I am. You know, am I excellent? No, I'm not. Because I know what my failings are. But again, that makes me a good trader. And I'll leave you with that one. My failing is this. I can recognize the conditions of any chart. I can read pretty much any chart, and I know roughly where to get in and what I need to put against it in order to make some money. Where I fall down is I cut my trades early too much, and I know I do. I can see it in my journal because I often track as to where the price has gone afterwards and think, if I held it for that little bit more. But I'm a conservative trader and I trade for a day wage. I'm not greedy. I just look to get in, get out, get paid. but I know I could make X amount more. But I'm always looking to defend and protect my asset, which is why I scale out a lot. So I'll put a position on, I'll scale a lump out, leave a little bit to run. If it comes back and takes me out, well, it comes back and takes me out. But really, sometimes I should let it run. And it's something I'm working on, because this is a never-ending journey. You're never at the end of it. The markets are a living, breathing entity, and they constantly change. And again, this is why I say, if you're under 3 years, doesn't matter how good you look seem to be, you're still learning, because the market has cycles, and you haven't been in the market long enough to have seen the cycles. So what works today doesn't necessarily work next week. But the one thing in 15 years I've figured out that does work is zone to zone. You know, indicators come and go. Conditions of the markets come and go. But zones are always respected. You'll often hear them referred to as round numbers and things like that. But key level zones is where the big money looks to enter and exit markets. That's never changed since year dot. It really hasn't. You know, and it doesn't matter whether you've got a candlestick chart, a bar chart, Heikin-Ashi, or even a simple line chart. The stall points will always be the same place. And that's the strength of GoldenEye. That's the strength of how I trade. Now the kicker is hanging on to that trade from one zone to maybe 2 zones away. Something I'm working on. So there you go, Dust. Just the ramblings of an idiot, trying to give you the voice of experience. But if I am to give you the voice of experience, it's always look in the mirror. You are your best teacher. Know thyself, and don't gamble. If you are losing more than you're winning, you have to set size appropriate, minimum position size, till you're winning more than you're losing. Then when your losers are outweighing your profits, again you have to size down so that you're not doing too much damage, till your profits are outweighing your losers. Once you've done that, you can move from being a beginner into intermediate and start increasing your position size slowly and gradually. Then you'll start on the path to being good. So, as always guys, I'm very open. Talking of open, when I come back off holiday every other Sunday, we're going to do a live stream. Be about 7-8 o'clock UK time. Ask Scruff. You can ask me whatever you like. You know, cost of it, just subscribe to the channel. If you subscribe to the channel and I see your question, I'll answer it. And if you can't make the live stream, by all means drop me an email. You'll find the details at the website, thescruffytrader.com. Drop me an email, I'll read it out, give you a little shout out, and I'll answer your question that way. And then that way you're getting something back into the community, because I genuinely have your best interest at heart. So as always guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.